light of recent events, we wanted to talk about what's happened and what we think this means for the market. So let's start. What happened? Silicon Valley Bank, or SVB, was a non-diversified bank specializing in providing banking to venture capital in the innovation sectors of the economy. On Friday, California state regulators and the FDIC stepped in and took SVB into receivership, meaning they shut it down. Over the weekend, we have been working tirelessly and pouring through the data on SVB to identify whether this was systemic or an anomaly. In other words, is this an issue across many regional banks or just a few? We believe that this was the cause of extremely poor risk management and poor portfolio management by SVB, especially considering their non-diversified client base and their clients' sensitivity to interest rates. It is common for banks to use deposits to purchase fixed income instruments to provide loans to generate yield. The issue with SVB is that they bought large amounts of long-dated bonds prior to the Federal Reserve hiking interest rates. They didn't have adequate risk management, meaning they didn't hedge in the event that interest rates rose quickly. At the same time, their clients, mostly venture capital portfolio companies, were no longer getting venture capital equity funding, again due to interest rates. So these companies started withdrawing cash to fund operations, likely at a more rapid rate than the average depositor. On Wednesday of last week, SVB disclosed that they had lost almost $2 billion from selling its bonds. SVB tried to raise additional capital to cover the loss, but they were unsuccessful. When the news broke, there was a classic run on the banks, which was really exacerbated by the fact that the VC industry is very tightly knit, and this traveled quickly via social media. It became apparent over the weekend that 84% of the deposits held by SVB were in excess of FDIC limits. This created a lot of anxiety that customers were not going to be able to make payroll, which could have had a material impact on the economy. This is when the federal government stepped in. On Sunday, or yesterday, after it became clear SVB did not have a buyer, the U.S. Treasury Department effectively guaranteed all deposits at SVB, even those in excess of FDIC limits.
Is this 2008? No. Will this be the only regional bank to fail? No. And we're already seeing a couple of other banks being shut down, like Signature Bank. Fear spreads quickly, especially in this day of social media, and we would not be surprised to see more runs on regional banks. With that said, we believe the broader banking system is still healthy, especially when you look at the big banks with diversified business models and higher liquidity requirements. We find a lot of comfort in the federal government's stance towards guaranteeing the deposits of SVB and Signature Bank. We're also pleased to see action taken by the Federal Reserve yesterday when they announced a new bank term funding program, which will provide short-term liquidity to banks and prevent some banks from having to fire sale assets. We expect regulatory reform for regional banks to follow, which would help reduce risk to the banking system. We have always preached diversification as a core part of our investment philosophy. Having a diversified portfolio does not matter until it does. Our client portfolios are well diversified and not overly concentrated in a single holding or sector. We also feel very comfortable with the protections afforded by Schwab as it relates to cash and your investment holdings. Standard FDIC and SIPC protections are in place, and over 80% of client cash held at Schwab is insured dollar for dollar by FDIC. As a further safeguard, Schwab has access to over $80 billion in liquidity facilities, which is more than all of Schwab's unsecured deposits combined. As an extra precaution for those clients holding Schwab's money market funds, today we'll be swapping the retail money market fund for a Treasury money market fund. The Treasury money market has 100% daily liquidity and is not subject to redemption gates. As always, we are available if you have any questions or concerns. Thank you for placing your trust in our team. We certainly do not take the responsibility lightly.